Welcome back, everyone. In today's video, we're diving into the latest market action surrounding HIMS, a company that's seen some intense volatility lately. With its stock down nearly 6% today, we'll break down what's driving these price swings, including the latest economic data, short interest dynamics, and technical levels to watch. Whether you're a long-term investor or a trader looking for your next opportunity, this update has you covered. So, if you're interested in the latest stock market insights and want to stay ahead of the game, let's jump right into it. Alright, so HIMS is currently experiencing a significant drop, down about 5.92%, sitting around $53.70. The day's range so far has been as low as $52.70 and as high as $62.70, showcasing quite a bit of market volatility. I have to say, the way this is all unfolding is almost a bit amusing. We saw a brief surge earlier as the market initially digested some promising economic data, but things quickly took a turn. Earlier today, two key economic indicators came in better than expected. The Producer Price Index (PPI) reported a minus 0.5% change versus a forecasted 0.2%, while retail sales for the month came in at 0.1%, beating the expected minus 0.1%. Both of these numbers suggest a bit of economic resilience, which normally would be a positive sign for the market. However, Federal Reserve Chairman Jerome Powell also spoke today, and while he didn't deliver any particularly alarming statements, the market remains on edge. This reflects one of the more frustrating aspects of the 2024 market environment. Even good news can be met with a bearish response because it dampens the chances of interest rate cuts. This reaction is a clear example of the market acting in line with current economic realities. Investors are essentially reading these stronger than expected figures as a sign that the Fed might hold off on cutting rates in upcoming meetings, including those in June and possibly even July. This means that despite solid earnings from many companies, including HIMS, the market is still grappling with the idea that good economic data might not be good news for stocks if it leads to a tighter monetary policy for longer. Adding to this mix, Walmart recently released another round of cautious guidance, echoing concerns that consumers might face additional pressure from tariffs and a generally tough economic environment. Despite this, HIMS itself has been relatively quiet today, with no major SEC filings or significant news releases. However, they did participate in the J.P. Morgan 53rd Annual Global Tech, Media, and Communications Conference this morning. I haven't had a chance to listen to the full 35-minute fireside chat yet, but if you have, drop your thoughts in the comments below. From a short interest perspective, the situation remains interesting. Today, we saw about 184K shares returned, a relatively small amount considering that about 33.83% of HIMS' total free float, which equates to roughly 65.83 million shares, is still being shorted. This high level of short interest can be puzzling, especially for a company showing consistent growth like HIMS. It's a risky play for short sellers, but as always, it's a part of the market's broader dynamic. In the options market, we're seeing some notable action. Today, approximately 50 million calls and 28 million puts were traded, with 48% of these being bearish. This points to a generally cautious mood among traders, likely reflecting broader market jitters ahead of tomorrow's Michigan Consumer Sentiment Report. Historically, this particular data release has triggered sharp market reactions, with 4 of the last 5 reports leading to significant pullbacks. So, if that sentiment number disappoints, we could see another wave of selling. On the technical side, HIMS is currently trading between the R3 and R2 resistance levels, with a key pivot point around the $59 to $61 range. If it can break above this zone, there's potential for a solid upward move. However, the stock remains overbought in the short term, as reflected by the stochastic RSI, meaning a pullback is always a possibility if sentiment turns sour. Looking at the big picture, despite today's volatility, HIMS has posted impressive gains over the past month, up roughly 96.51%. That's a huge success, but it also means that some profit-taking is to be expected. As always, keep an eye on those key support and resistance levels, and be ready for potential market reactions to tomorrow's data. So, what's your take on HIMS right now? Are you buying the dip, holding, or staying on the sidelines? Let me know in the comments. Alright, that's all for today's update. Remember, this is just my perspective, not financial advice. If you found this video helpful, please like, subscribe, and stay tuned for more insights. Thanks for watching, and have a fantastic day.